Hello, everyone. Andrew here. And, I did a video a couple of days ago about is there going to be a housing market crash? And I said, not only is there going to be a crash, it has already crashed. I mean, things have literally just almost come to a standstill for real estate. And there's a couple of reasons for that. And right now, there's a real big double whammy going on. And when I say they've crashed, I mean, what's happening is fewer things are coming out in the market. Things are on the market longer. For a while, it seemed like you could just put a house on the market and you would have multiple offers within the first couple of days of it coming on the market. Now we're seeing more price reductions happening where people are having to lower the price because they're not able to get that price they originally thought they were going to be able to get for it. So you're seeing more price reductions happening. You're seeing the days on market being longer. I'm even seeing things starting to expire because they didn't sell. So the housing market really has crashed. And right now we're having what I call this double whammy effect because interest rates are above 7%. They're at like 7.15% for an average 30-year mortgage rate. And that's higher than it's been in 20 years. So it's been 20 years since mortgage rates have been this high. So anyone that's doing a first-time home buyer has never seen mortgage rates this high. So on top of that, though, also it's harder to get a loan right now. There's something called the mortgage credit availability, and that's actually at its lowest in since 2013. So 9 years, the lowest at what's called the mortgage credit availability. And what that is basically the willingness of banks to lend money. It's getting harder to get qualified for a loan because as inflation rises and the cost of everything is rising, lenders are afraid there's going to be more delinquencies. So they're less likely to approve a loan with a lower credit score or approve a loan with the lower down payment on it because they're afraid that there's going to be more delinquencies. So the lenders are concerned basically that a weak economy can lead to more delinquencies, which unfortunately can then lead to more foreclosures. We're not seeing that yet, but that always kind of lags behind everything. But you take that 20-year high in interest rates, and it looks like it's going to go up a little higher. And you take this, what's called mortgage credit availability, meaning banks again are just being more reluctant to lend right now. So they're tightening their standards on what they're going to lend, what the qualifications are going to be for people to lend. So it's really a double whammy right now for the home buyers, which in return also hurts the home sellers. Less homes come on the market because of this. And it really, I've always said, ever since I've started real estate, that real estate is the backbone of our economy. It really is. Everything starts with real estate, buying and selling of homes and building new homes. It's amazing the amount that it contributes to our economy. So when that, and it's directly affected by, again, this mortgage credit availability and these high interest rates directly affect that. And because of that, the whole housing industry is coming to a halt. And I don't mean just for real estate agents, I also mean for home builders, so for construction workers, people that rely on new home building as their, again, form of employment. That is happening. People are canceling their contracts for new home building because unfortunately now with the higher interest rates, they're not able to afford that new home that they wanted to have built for it. So that affects the construction industry. So I've always said, again, that real estate is the backbone of our economy. And when you see what's happening now, this double whammy that I've just been talking about, it's going to trickle down into so many other things. And it's really unfortunate because there's no quick fix to this. It looks like we're going to have at least two more um, increases. Well, two more this year, and then maybe even more going into 2023. We don't know what's going to happen, but it's going to be a while before that effect stops anything. So it's going to be a long time before we see these interest rates coming back down. And as long as inflation stays high, again, banks are less willing to lend. And so that double whammy is really hurting everything. I wish I had better news for you because believe me, as a real estate agent, this really hits home, but it should hit home for everybody because this is a really important issue. And again, it affects everybody. This inflation affects everybody, and these mortgage rates affects everybody. I wish I had better news for you, but that's where we are today. Thank you.